GM, I'm just inviting the speakers. If you questions, Kenton, yeah, and Code Harms as speaker. And thumbs up if you guys can hear me okay. Okay, cool. Thanks, Captain Sparrow. Just tag me if anyone wants to speak with questions. Yeah, I think we can kick off from here. So just as a recap, we have spent the last 9 months building out the app layer. And the app layer had a lot of permutations, like because the design space, the app layer was huge. So rather than try and come up with something imaginary back in September, we decided to start building and, cut down the forest with the axe and try and get to the edge. And when the app layer had sufficiently matured in its design, not being activated yet, based on, and Hans will shortly take us through all of those discrete components that have built out over the last 5 months. Now that we know what the app layer is, what it's called, what it does, security, how it functions, now is the time in which we present it to the community, tweak a bit more in terms of get a bit more feedback, and then go for it. So I'm going to get Hans on, and Hans to start just to give us just a quick summary of all the major components and what they actually mean.
Hi guys, throwing me at the deep end here. Okay, cool. Major components. I mean, there really is only one component to the app layer that makes it all function, and that is CosmWasm, which is the ability to upload WASM code to THORChain and instantiate it, and then you have an address which has a defined set of rules that the contract has. Whereas your seed phrase that you create can do anything. The code that you instantiate can only do a fixed thing. And then we've just created a few pieces around that to allow those contracts and individual accounts now to be more expressive. So secured assets is one of those, to allow you to take all of the observed tokens from each layer one chain, deposit them, mint them as bank tokens, and use those tokens in the rules that the smart contracts are coded with. And then the second piece is the token factory, which allows smart contracts on the app layer, well, just smart contract accounts to tokenize, represent the ownership of something, whether it's an LP deposit, whether it's a deposit into a lending pool. And so really, like CosmWasm, secured assets, and token factory are the three things that make the whole thing work.
Yeah, awesome. And that sets up a huge design space for where we can take this over the next few years. Do you want to talk about the whole no hosted layer, hosted app layer, and remote app layer, which was one of our very first discussions back in August, Hans, is we thought, should we just turn Kujira itself into a remote app layer? And do you want to talk about why we made the decision to go with hosted and in the future? That was probably the first.
Yeah, I think so. So when you talk about kind of like a remote app layer, what we were discussing was having a separate chain with potentially a separate validator set, potentially a different staking security model, and all of these things become questions and uncertainties in how you deliver that. But it starts to look a lot like what you have between existing Cosmos chains, which is this interchain accounts concept, where you sign a transaction on your chain A, then it's relayed to chain B, something happens on chain B, that's relayed back to chain A, and now on chain A you can do something else. And it's just of the two, there were two fundamental issues that we had as a kind of a remote chain, as we were as Kujira within Cosmos, and that was this asynchronicity between transactions when you try to interact with another chain, and the ability to interact directly with layer one liquidity. Obviously, we've solved the layer one liquidity piece and create, like, having version 1 of this app layer immediately going and being another chain because of some potential scaling issues or whatever just seemed a bit premature. There's an adage in software: it's make it work, make it right, make it fast. And so we're on the make it work and make it right bit right now. And when or if blocks ever get too full or too slow, and we reach scaling issues on THORChain itself, I believe that's the time that you then start looking at how do we really kind of, we need to scale this further. But with all the work that Strangelove are doing with the Bifrost refactor that will, take hundreds and hundreds of transactions out of the mempool, out of blocks, I think that's been pushed a long way in the future.
Yeah, sure. So you can, like, Hyperliquid today could be called a remote app layer to Arbitrum. And in the sense that and Arbitrum itself from L2 to FL1. So anyway, the flow goes, you bridge USDC into Arbitrum, and then you deposit into Hyperliquid, which itself has a much smaller validator set. It can punch out really fast block times. I think they run at 200 milliseconds or something like that. And users can do crazy sex-like experience because of the fast block times on Hyperliquid. But then you deposit back out of Arbitrum and then withdraw back to L1. So originally it was like, okay, remote app layer could work in the sense that users deposit or move into THORChain and then deposit into this remote app layer. This remote app layer is not limited. It doesn't have any L1 observations or Bifrost or TSS faults or any of that. It literally is a CosmWasm chain cranked to the max. And the security would be rented back off THORChain via some restaking primitive. Now, that is still not off the cards. We, as Hans said, well, let's just get something started. And a hosted app layer on THORChain made the most sense. We can get started when we start getting to the limits of what's possible on THORChain, then we can think about it. Now, one candidate that is on the table for a remote app layer in the future, but not today, is the Perps DEX. Perhaps because you just literally deposit collateral, that collateral sits there and does nothing actually, and then users trade synthetic versions against that collateral. And if they get liquidated, all it's doing is an internal accounting system is moving the claim on those collateral between the DEX itself and different users who are short or long. So a remote app layer is still not off the cards, but we're launching Perps on TC today, well, as of now, this quarter. And perhaps in a year's time, when we've maxed out TSS, we've maxed out Bifrost, we've maxed out scaling, and we want to go faster than 2 seconds, then that's when we consider a remote app layer. Would you agree, Hans?
Yeah, that's exactly it.
Awesome. So that was the first permutation. Feel free to ask any questions about remote hosted. Now let's get talking into the next heading on that ADDR, which is the CosmWasm and how it's been implemented and the limitations of that WASM. So Hans, you want to take us through a high level of
that? Yeah, I think so the kind of the base focus here was to make sure that there was control over it, and it wasn't a free-for-all. Terra was completely permissionless. Various other Cosmos chains are permissionless, and there have in CosmWasm's history been vulnerabilities that are they're not critical. They don't result in loss of funds, but they can grief the network. They can cause the network to halt through non-determinism, and exclusively those have been accessible through exclusively through malicious contracts. And so having a level of control over what's allowed to be deployed, initially it protects the network against those kind of attacks. The second part of having the control over what is allowed to be deployed and limiting the number of contracts that are allowed to be deployed, I think it gets a little bit technical, but within CosmWasm, there's a concept called pinning code. So you upload your code into the chain. All the node operators store this code. Anytime you send a transaction to the chain and you want to execute something with that contract, the node operator's machine has to load that off the file system into memory, execute it, and then remove it from memory. And you have to pay gas for that. Whereas code pinning tells the node operator's machine to just hold that contract in memory always. And so because we now route all the storage and instantiation and execution of contracts through the THORChain layer, and the ability to store code is restricted, we can it's allowed us to basically pin every single code that gets uploaded. So you don't pay the gas, execution's faster, lower computational overhead for node operators. So it just makes it a better smart contract platform than than your permissionless likes of what Terra was and what the Neutron and Juno or whatever, right? Like, it's just a different set of design standards.
I suppose you could analogy would be keeping something in memory rather than reading it from disk again. In terms of
Yeah, it's exactly what it's doing. Yeah.
Cool. Okay, cool.
Yeah, so it's faster, it's cheaper, it's just a better environment when things are more controlled.
Yeah, cool. And so the WASM contracts, the contracts can message send, message deposit, message, and recursively call message execute contract. And do you want to talk about the permissioning in terms of like, the process, and also like how the whitelisting happens in the deploy address, and also the memes for the pausing?
Okay, yeah. So when you store some WASM code, it returns the checksum of that code. So it's a unique alphanumeric string that identifies the code that you just uploaded. In order to be allowed to upload that code, you have to do a pull request. There's a file inside, can't remember which directory it's in, but it's somewhere inside Thor node. The WASM permissions mainnet or WASM permissions stagenet, whichever one you're interested in, and you add the checksum. You add the deployer address that is allowed to upload the code with that checksum, and you're also required to just add an origin, so a link to a commit hash on a GitLab or a GitHub repository, so that somebody can go into that repository, compile the code, get the same checksum, guarantee that the checksum represents the code that they're looking at, and use that as the verification step. So that's the process for allowing somebody to upload code. That checksum is then used for control as well. So there are 3 different tiers of memes that node operators can use to control in the case of vulnerabilities, exploits, whatever. So whenever a contract is instantiated, a specific version of code is instantiated and creates a new account, gets an address, you can pause just that one version of that contract for being executed. There's a meme that uses the last 6 characters of the address, which is the checksum of the address, in order to fit into the meme length. And you can pause just that one contract. You can use the checksum, and you can pause all code instances with the same checksum, which means that if there's an issue found, particularly in a specific version of a contract, you can pause all of those contracts with one memo, and then there's a global halt. And actually, we've spoken about this a few times now. I think what will be useful, particularly for node operators, is some make commands that make this easy, because there's some funky encoding to make sure that we fit things inside the maximum meme string length. So yeah, I'll get those added.
Okay, no stress. And so the wasn't the no memes control says, because these are operational memes, for the way that THORChain works is because an operational meme has to respond quickly, and an operational meme only lasts for 1 hour. So 3 nodes can pause for what? Okay. So 3 nodes can pause. So that's different. That's make hold. 3 nodes can pause, and 4 nodes can unpause, and then 5 nodes can pause, and then 6 nodes can unpause, all the way up until like, I don't know, 51 nodes pause, and then it's done forever. So this is intended to be like if an app dev, and we could talk about emergency. In fact, let's just shelve that, and we'll talk about emergency procedures discreetly at this second section. Let's go to the case number 4, and I am reading on the actual ADDR itself. I'll post a link. But number 4, do you want to talk about the X exec memo and what that actually means for the users?
There are 2 pieces here. There's the secured assets, the secured asset deposits, which is a separate memo. You can just you send your funds to the inbound address to the Asgard vault with a secure plus memo, and it will mint a bank representation. And then you can come onto the app layer after that to the wallet that you just deposited those funds to, and you could call a contract. You could take the secured Bitcoin and put it in a lending vault or borrow against it. What the exec memo does is it bundles both of those actions up into a single transaction. So you call X : and then you put the contract address you want to call. In future, this is going to become an integer sequence rather than a whole address, but whatever. And then : and then the message payload that you want to call that contract with. And so when you send those funds to the Asgard vault with that memo, what THORChain will do is it'll observe that transaction. It'll see that you just deposited like $100 of BTC, and you want to call the Bitcoin lending contract with a deposit function. And so it takes those $100 BTC, it mints secured asset representation, takes those new bank tokens, it decodes the message you want to call a contract with. It now takes those funds, your mapped Bitcoin address, which because it's BEC32, it can map it to a THORChain address, and it calls the lending contract with that address, with those funds, and with that message. And in a single Bitcoin transaction, you're now lending Bitcoin on the app layer.
Yeah, so just to refresh, you can now directly call contracts in Ruji from your L1 wallet. Right now, that's limited to BEC32 encoded chains. Bitcoin luckily is one, and so is Litecoin, and also Cosmos. So what it means is you can literally use your Bitcoin wallet, your ledger, and as long as you can get a op return in or a payload in, you can actually just call that contract directly from your ledger and do all the contracts. So you can go 10x long, you can borrow everything. You don't need a Ruji wallet or anything or THORChain wallet. You can just literally use a Bitcoin wallet. And Hans, talk about how we're going to make that compatible to EVM and Solana chains.
Yeah, I mean, we just need to add signature verification so we need to basically encode an EVM address with a BEC32 encoding, and then provide signature verification for EVM wallets, so that they can sign with the key pair generated for that, and with the signing mechanism for EVM transactions, and have that verified inside THORChain with against a BEC32 encoded address. So it's just a bit of signature verification. We could theoretically support it today without the verification. It would just be like a remote control system. You wouldn't be able to then use the same key pair directly on THORChain on THORChain on the app layer. And so that's why it's prevented right now, just so that we don't end up with funds that are exclusively controlled via remote control. Once you do that first exec memo, and you now have funds in a contract or doing something on the THORChain app layer where those funds have been deposited with a Thor1 address. The key piece of UX here is that we want to make sure that the key pair that was used to sign that transaction and generate that address on the original layer 1 chain is also able to sign transactions directly on the app layer, or just on THORChain in general. So if you now have secured BTC and you want to send it to somebody else on the app layer, you can sign that transaction without withdrawing back to BTC and sending on the Bitcoin network. So yeah, but that shouldn't be too far away, I don't think.
Awesome. Yep, coming down the pipeline. Okay, so moving to the next part, and I'll pinned it to the top of space there. So secured assets. So there's a couple of different parts of secured assets. Do you want to explain what they are, how they're denominated, how they move, where they came from, how to mint, redeem, etc.?
Yeah, I think secured assets was basically a fork of the work on trade assets. Trade assets have a different key value store. Secured assets use the Cosmos SDK bank module, which is how Rune is accounted for, it's how TCY is accounted for, and it's how smart contracts know how to move funds around. It's the same way that a native token has like a BTC.BTC representation. A secured asset has a hyphen instead of a dot. And then when you're talking about moving it as a Cosmos SDK denom string, for those that are interested, it's just a lowercase version of that. So BTC-BTC in lowercase is the equivalent to Rune in lowercase, when you're kind of signing transactions and things.
Yep, awesome. So these smart contracts really only get to move around secured assets, Rune, and then soon and also TCY, which is the native asset, and the token factory assets.
And token factory tokens.
Yeah.
Yeah.
Now, we've made tokens permissioned in the sense that they can only be created by a WASM contract. But explain how that works, how an app dev can basically launch a contract which itself can create a token.
Yeah. So the way that these, so that there are a handful of different message types that have been created for Token Factory. Message create denom, message mint tokens, burn tokens, all the things you'd want to do with them. And each new token has an admin, and only that admin can mint and burn. So those messages are currently blocked in the mempool, so you can't broadcast those messages directly from a node. The only way that those messages can be processed by the state machine is having them emitted by a smart contract, which is already kind of like it's inside that state machine already. The point being that, like, if you just allow somebody to arbitrarily mint tokens, it could come along and mint 100 million different versions of a token, and suddenly you have massive state bloat, and it's just a bit of a kind of a griefing attack vector. So it just kind of locks that down a bit. The simplest technical route, I guess, to launching a token is, yes, you can write a smart contract, which when you instantiate it creates a token, it mints a supply, it puts the supply in a wallet. But it's an opportunity for a little bit of a plug for Ruji Ventures, which will be rolling out in the next few weeks, which has a fully featured token launch interface where you can design your tokenomics, your vesting schedules, your recipients. Then you run a Dutch auction mechanism or however you want to run your sale to launch your token. As soon as that sale completes, it creates a trading pair, it creates a liquidity pool, it deposits funds into it, it starts the vesting. It's a complete turnkey solution for launching a new token or a new project.
Yep, awesome. Okay, cool. Moving on to the next heading in that ADDR, switch handler, very brief one. So it's just enabling initially the merge tokens come across. It was memo permissioned, but I think we're going to move to, just like today, if you want your token added to DexAg on a token list, you just apply for a base dev to PR that through. I think what we'll move to is, rather than humbugging nodes each time a new token wants to switch to THORChain, because we intend to bring all the THORChain ecosystem projects over to Ruji. You know, your Thor wallets, your Thor swaps, your shapeshifts. Like, we'll go out and aggressively pitch them to join. The key thing, and like VoltaSeek, blah blah blah. The key thing is granular and smart contract control of the affiliate fees. So most of these wallets earn the vast majority of the income from THORChain affiliate revenue, and we want to make it really expressive. So like have various different tiers of staking control and whatnot. And we think that's best done in Ruji for these THORChain affiliates. If they can still earn fees from separate income, all they're going to do is have a smart contract that calls an EX memo, an exact memo, to essentially deposit that income into the wallet. So they can these THORChain affiliates can run a smart contract staking system on top of THORChain with granular control of staking and get income from anywhere, just deposit it into a secured asset directly into that smart contract. Agree, disagree?
Yeah, so we'll have this off the shelf hopefully. The smart contract has a components to it. It has an account-based staking and liquid staking version. So account-based is you stake your tokens when you get sent to the contract address, and then it's allocated and distributed to people, and you can withdraw. So you stake your share that you have there. So this contract is being used both straight up Ruji staking, plus you'll also be able to stake Ruji Rune LP tokens in due course, and they will either be account-based or auto compounding, which is quite cool. But this contract is also now being deployed as a TCY auto compounder as well when TCY goes live. So it's a very generic thing. Any team that has revenue that they want to distribute to stakers, either with an account-based staking model or with a liquid staking model, it's the same contract. And I think we'd look to hopefully roll that into the launchpad, or if not, just a kind of a rolly road. I need staking, I need revenue conversions from all these different assets I'm getting. Maybe not with the swaps, but depending on what tokens you collect revenue in, and distributing them to stakers of tokens that you can now switch. So you bring the tokens over, They're now bank tokens. They're now compatible with the merge, with the state contract. Sorry.
Yeah, 100%. So super excited with that to see where we go. All right, let's move on to security. So we broke this down into like process security in terms of like due diligence, permission deployment, etc. Also call limits, query limits, and asset limits. Do you want to quickly treat WASM security, app security?
Which angle? Sorry, we're looking at here.
Yeah, just how we like the apps on THORChain are really isolated in sandbox. They can only call certain messages. They can only query.
Oh, right. Okay. Yeah. So, we kind of discussed the architecture and the flow of messages, and the only thing that a smart contract can do to influence anything externally is to emit what's called a sub message. So any transaction you emit on a Cosmos chain is a message. So you have message deposit if you want to like bond your rune, and you submit that message deposit. Contracts can only emit sub messages and only emit supported messages that any kind of EOA would be allowed to emit. So they don't have any privileged access. On other chains and other implementations of CosmWasm, there are interfaces which allow you to create custom bindings for smart contracts to do certain things. But there is none of that here. The only thing that a smart contract can do is emit a protobuf encoded message, which has to be decoded through the same message servers that a message that is sent by any entry, any EOA is allowed to do. So it is a more restricted version of an EOA, really.
Yeah, 100%. And yeah, they can only move certain assets and like for example, Rune, TCY, and secured assets and the token factory. While we're on
Yeah, I think actually secured assets is an interesting one because because secured assets are minted and redeemed at the base layer, and there are fork of trade assets which has been live for a long time now. There is so smart contracts in the app layer don't pose any kind of systemic risk to the function of secured assets. There's always the risk that somebody can misappropriate funds, but if there's 1,000 BTC that have been deposited, there's only 1,000 BTC that can be redeemed as secured assets. There's no way that you can over redeem secured assets through an issue on the app layer.
yeah, and that's partly of how secured assets are done. Is they're not actually one-to-one accounted for. They are accounted for as shares. So if 1,000 Bitcoin has been deposited as secured assets, then there are 1,000 shares available. If someone like was able to mint let's say theoretically mint the secured assets to infinity Bitcoin, they just own 100% of the shares. And so when they rock up to redeem, they just still get 100% of 1,000. They don't get infinity Bitcoin and drain all the pools. Does that make sense? So, but this is not a secure. This is nothing to do with the app layer. This is to do with how the secured assets were done. So it's inherently safe. The most, if 1,000 Bitcoin is deposited, only 1,000 Bitcoin will come out as secured assets. And but the app layer does not directly mint and control secured assets. It only handles them. If that makes sense. Cool. Okay, let's talk about economic security. So we've had a lot of back and forth with this. Today, THORChain has a security budget to onboard the app devs, the app layers, and and TVL. So let's zoom out actually, and Kenton is probably keen to talk about this as well. So economic security in THORChain historically has been the protocol will only store what's in the pools, and that was true, kind of almost 100% true, because it never counted stage pools, and it also didn't count pending inbound assets, and it didn't count confirmation counting assets either. So it was never strictly 100% true that it would only protect pooled assets. It was only protecting confirmed, uh, deposited, non-stage pooled assets. Then, so that led us to try and like make synth work and various other things. But a year ago, we decided to abandon synths and roll out trade assets. And trade assets was essentially wrapped Bitcoin. So the Bitcoin is in the vaults, but it's not in the pools. and a trader, an ARB, can essentially move the Bitcoin from the vault. So the Bitcoin stays in the vault, but the accounting for it moves from outside the pool to inside the pool to swap to something else, if that makes sense. So that was trade assets. And trade assets, there was actually no cap. So it like floated in like the security margin. Trade assets are extremely high velocity. So today, trade assets account for, I think, 15% of the TVL, but they do 1x the volume. Well, sorry, like they do all the volume that the L1 does and more. In fact, it's like almost 2 to 1. So trade assets are extremely hardworking. The monetary velocity is extremely high. They pay a ton of fees. But they do have a fee discount. It's 5 bips instead of 8 bips for a one swap. So ARBs prefer to use trade assets instead of the L1 assets. And it's part of the reason why THORChain has really good ARB, well, as good as ARBs possible, better ARBs coming. So then that was a year ago. So we moved away from that. And then secured assets are a fork of trade assets. They won't get the 5 bips discount. They'll go to 8 bips, and they're essentially handled like an L1 asset. But they also exist in the security margin. And there is a cap. Essentially, we don't want secured assets to go crazy big. I mean, you can talk about other protocols that have had, like Ren protocol in 2020 had 3 billion of Bitcoin with only 300 million staking cap. So clearly, like, why if you're the majority of validators in Ren protocol, you can, for $200 million in Ren, you could have stolen $3 billion in Bitcoin, which is crazy. And that has have been how most, in fact, all wrapping protocols that have ever worked is, I mean, look at Wrap Bitcoin. For a single logo, BitGo, they're storing like $8 billion worth of Bitcoin. But all the thresholds and the Stargates and L0s, essentially, it's there's like they've always only ever operated in optimistic security. Yes, at the end of the day, whoever runs Valet can steal all the money, but they don't, because people will chase them down. But THORChain has always designed the fact that anyone can be a node operator, and nobody's going to chase anyone down because nobody knows who anyone is. So that's why we've had this kind of really hardcore stance. Anyway, so circling back around, there is a TVL cap. Today it's based on this crazy, like, complex, and I'm sorry it's became complex, but we are making a change to make it super simple to understand. So today it's on like some weird thing where it's like the max effective bond is 2/3 of the active bond plus or minus blah blah blah. It's very hard to understand. And part of the process of making the base layer boring is actually making the base layer simple to understand. So we're just going to move to a single meme called TVL cap basis points. And if set to 10,000 bit, it will come out default 0. So we'll have to run a node campaign to set this. But if TVL cap is set to 10,000 bips, it means the total TVL on the network can equal and will be capped at the active bond. Super simple to understand. If you see 100 million rune bonded, then the TVL cap is 100 million times the dollar price of rune, aka dollar. So that's 100 million, and that covers pools, secured assets, trade assets. So this is the one that definitely Kenton would like to talk about. So handing over to Kenton, give us your feeling, your vibes on that approach.
Yeah. Yeah, I'm definitely okay with going back to the original, how THORChain, what the cap was before, right? Because when MCCN launched, that's what it was, right? The dollar value of the bond was a hard cap, and it was after that, like a year later, I think, year and a half later, it was reduced. The hard cap was reduced to the bottom 2/3 of nodes. So yeah, that I'm cool with. That's fine. What scares me is just the unlimited cap, and I keep thinking about it because, like, about app layer and stuff, and like, to me, the risk with app layer is that it's a real success, and we're all drunk on fees and making money and how great it is. We want to grow it, right? We want to expand it, and so how do we do that safely? And I'm still getting stumped. I don't know. I still haven't figured it out, but I like this first approach. I think it's good.
Awesome. So shortly, so 3.5 has TVL cap basis points. And I guess next week or the week after, when it's live, we'll run a node campaign. Where will you campaign to set it? So I think I'll just campaign to set at 10,000. So 100% bond equals 100% TVL. that will give the app layer a $40 million budget to work with. And there is a cap, and we still will need to campaign node operators to bond more. I personally think 10,000 is okay. Where will you be sitting?
Yeah, I do. I'm fine with that. Like I said, that's what it originally was when THORChain launched, right? So
Yeah.
it's not like it's unprecedented to go back to that.
Yeah. Okay. Cool. Awesome. All right. Any other
Yeah.
questions on economic security and I guess like if we give the app layer $40 million budget or 40 million rune budget, by the way, it's dynamic because if the price of rune goes up, then rune gets taken out of the pools, which opens up. So if there's 40 million rune in the pools, then it gives 60 million rune to the app layer. If there's 20 million rune in the pools, it gives 80 million rune to the app layer. So like, yeah, the whole idea is to get these apps running the little hamster wheels around on increasing the velocity, making fees. That fee revenue is going to the system income, buying rune and giving to the nodes, and that responds to positive price performance because we can just POE DCF value this. So that's kind of like the direction.
That's what I'm hoping too. That maybe the app layer gets going with the 40 million, and we get this nice positive engine going where it's driving up the rune price and increasing the cap as it goes. So that's what I'm hoping. And if not, we'll just deal with it at the time, and we'll have more information and be able to make better decisions then.
Yeah, awesome. So speaking of fees and fee sharing, I'm just going to get Pragmatic Monkey to jump on and explain that all of the Ruji apps are designed to make money, right? That we are not launching apps for the fun. They are literally designed to earn fees, get users to earn fees, and that part of that fee sharing is swapped to rune and sent to the reserve module address. But Pierre, what have we done to make sure these apps make money and make a lot of money?
Well, so first of all, I'm just high level. Like there are two cases, or actually there is one case is there is a base fee split of all the apps, which is 50-50 with the base layer and Ruji stackers, and there is one exception of that, which is for any economic activities that directly generates revenue for the base layer, which is actually only one case, the swaps that we execute against the base layer liquidity. In that case, there is no fee sharing because in that scenario, the base layer received is a regular swap fee. And then on all the apps, we have a sustainable economic model. So they are just like any other financial products. So the biggest one will be the order book DEX. On the order book DEX, you get two types of fees. You get a maker fee when you add liquidity to the order book, and you act as a maker, which is 7.5 pips. And you get a taker fee. If you take liquidity from the order book, you execute a market order, which is 15 pips. And all this liquidity, all those fees are half cents to the base layer. Then you get, for example, the money markets, so Ruji lending. How that works is a peer-to-peer money market. So you will have on one side, people can come, they have assets they don't want to use. They can put in those pools and lend them. On the other side, you have the demands. People can come and borrow those assets to short or do leverage position, do whatever they wish to do. There is, based on the utilization, so the ratio between how much assets is borrowed versus how much is available to be lent. You have an interest rate that is defined, and the more the higher the utilization ratio, the higher the interest rate. The interest rate is charged on people who borrow. 90% will go back to the lenders. Of course, they need to have an incentive to lend, but 10% is collected at protocol fee and is shared 50-50 with the base layer. You get then we are going to have perps. So perps also have trading fees that have a bit of a different structure. They will also share 50-50. We get Ruji Ventures, the launchpad. So every time a project will come and will effectively create a new token and raise capital this way, there will be a different fee taken, but 5%, or I mean, it's still being defined, but likely it will be 5% of the proceeds from the sales will be taken as a revenue, And so it's much higher because those are lower recurring events, but when they happen, they are like big events because they are usually larger amount, larger volumes. So 5% of the proceeds from the sales plus 5% of the tokens sold on the other side, on the buyer side, are taken as fees and shared. Same thing with we'll have an NFT marketplace. There will be a fee collected, 4% fee when the collection is launched. And then you will have some interesting mechanism on how you can have an excess profit versus the target. And in that case, you will have a 15% fee on the excess profit versus the minimum you wanted to raise, also collected. Then you will have 2% fee on secondary auctions. All of that split 50-50 with the app layer. And it goes on. We'll have the BTC-backed stablecoin, same dynamic. You will have a dynamic interest rates. We haven't spec'd out exactly how it will work. We may want to redirect part of the yield to the LPs making market for the stable, so they have an incentive to keep deep liquidity. But a big part of that will be collected as protocol revenue and shared with the base layer. So all the products have effectively a small fee that they take. I forgot, of course, the liquidation engine where you can bid on at-risk collateral from all the debt-related products. Same thing, every time you bid on the collateral, a 1% fee is taken on the collateral that is being bought out and shared with the base layer. So everything collects a little fee, and we share this fee with the base layer. So we are really very much aligned in trying to grow that together. What we expect is that most of the revenue, at least initially, will come from the spot order book DEX. It's just a matter of velocity. All those other products, they are more like primitives that are very good because then you can compose them with one with another and create more advanced strategy and financial products to curate for different risk preference. But what will most likely generate the most is the spot trading DEX. And this spot trading DEX, the beauty of it is that it will be able to virtualize the liquidity from the base layer. And so we are actually super well aligned because the more we grow the liquidity of the base layer pool, the more volume we can also facilitate on the app layer, and the more there is this reflexivity with the virtualization strategy where every dollar of volume we do on the app layer, tapping into the base layer liquidity, generates $1 of volume on one side and $1 of volume on the other side on the base layer. So it's really like a nice synergetic relationship where effectively we share revenue and we grow together. Rent price go up, liquidity goes up, app layer benefits, and base layer benefits.
Awesome. Yeah, thanks for that. So we've got tons of exciting apps to come. So as in summary, other apps directly use base layer swaps, therefore they pay the base layer fees, or they essentially derive income independently, in which case that's where the fee sharing comes from. A very clear one to understand would be like stablecoin interest rates that's like 100% created in the app layer. So that's where the fee sharing will come from. So super excited about the roadmap of apps and what we're going to deliver this year and how much more revenue we're going to create for THORChain. Now, moving on to the guidelines. So Pierre, stay online. Do you want to quickly talk about our quality and due diligence process and what actually we're trying to do here?
Yeah, sure. So what we are trying to do is effectively create an environment that is a bit curated. We don't want a duplication of 20 different DEXs and 5 different stablecoins, as you see on many of those permissionless chain. We want something that is coherent, that work well together. If you look at the Roger apps, they are really thought to work as all different parts of the same machines, and they are all integrated in the same UI. And we want to keep this unified experience, both on the app front, but also on the front end part of it, as much as possible. Like really offers this centralized exchange type of experience. And so what we are looking, so there is a process. If you want to build on the app layer, please be in touch with me. Like we are welcoming a lot of builders. We want to grow that. But there are a few guidelines to follow. One key thing is we want differentiation. So what you have to build has to be something that is not one of the core apps that are already planned or in the pipeline or currently being built. So it has to be a new vertical. That's one of the possible things. Or you can be, and I think that's where eventually we want to see the most builders, because there are so only a limited amount of very unique differentiated vertical you can have. But then once you have all those primitives, you can build all sorts of cool application, all sorts of composable strategy, all sorts of automation solutions. And so you can also join and be a builder that will be using those tools and build on top of them to create your own little business. And in that case, you can really use Ruji Venture to launch a token, be your own independent business. You get to keep 100% of your revenue in that case, because every time your app is used, you are using the core primitive, which already, and you already pay a fee, which is shared with the base layer. But in the other case, when you join, if you can launch like a new vertical, you can join as part of the Ruji Alliance, and then you will get funding, you will get audit cost supported, you will get access to a builder incentive pool based on the revenue contribution you bring compared to all the other apps part of the core app layer. And you will, of course, get integrated in the main UI and benefit from the marketing from Rujira. So there are a few other tracks, but if you have any idea, and have a read at the ADDR JP put together, because it gives some very good guideline on that. And just be in touch with me, DM me, ideally on Telegram, but I also check my Twitter, and I'll do the first triage of applications. And then we will have a process where next to that, if you move on to the process, you will have Mark that will handle you for the deployment from mainnet to from the DevNet, sorry, to audits. Then Hans will also then you will have like a third-party audit necessary before you go live. So we'll also advise you with that, hook you up with a good security firm we have been working with. Then last part will be with Hans having a final look at everything and helping you to do the PR to get onto mainnets. And then boom, here you go, live, and start generating revenue. And depending on the track you are on, it's well, in any case, it's gonna be
Awesome.
fun. So be in touch.
All right. Thanks, Pierre. So in summary, if you've got an app idea, hit up Pierre for triaging. He'll sort you out, and then that will go through to the team. He'll bring you from idea to audit, and then it goes to Hans for final review, and then it'll be submitted to the core devs. Core devs will do one last check, and then go live. And then once it's live, that's when the fun starts, fee sharing. And let's talk about systemic risk apps and contentious apps. So the ADDR kind of talks about systemic risk apps as an app that could accumulate large uncapped quantities of Rune, coupled to different ones like liquid staking tokens or Runes and borrow lend. Now, we want to keep an open mind, like, what's the limit to where Rune could be used? What if Rune's used as a payment in like an escrow marketplace? Then obviously let Rune go. So we can't just say apps can't use Rune. That's silly, because Rune can be used for different things. So we kind of define an app has to have caps if it's going to take on Rune, and just a feel good sensible is like 10%, and anything more than that is 10% of the on-chain liquidity or the on-chain bond, rather than the 10% of the supply. That's too much. So this kind of flows into the process for, and also contentious app. So contentious app is one that clearly breaches the guidelines, or like I said, becomes a risk to the protocol its users, or is clearly a rug or a scam, and those things are sometimes hard to put due diligence on, or there could be like a privacy app, darknet marketplaces, betting platforms, without out of controls. Now, we don't mind any app as long as they have what we call adequate controls, and we just look to the industry in the sense that, okay, Ethereum has heaps of privacy apps now, Railgun, Tornado Cash, etc. So there's nothing wrong with the Tornado Cash fork coming with THORChain, or marketplace apps or betting platforms. But rather than THORChain trying to say yes or no, let's just look to the industry and get the vibes. And we're just looking for the right vibes here, rather than say you cannot do this. And that's like, okay, that's a contentious app. Now, in the case of a contentious app forming, then it would clearly start to be called out by the community. And if the app developer behind the app or doesn't respond or becomes rogue or just disappears and it starts blowing up. That's why we have the Thor nodes have the hammer. And such a scenario could be that, let's just say an app is starting to get good. There's like might be some kind of betting app or like lottery app, and suddenly it accumulates a huge amounts of room. I don't know, like 20 million room, and there's insufficient adequate controls, and it looks like there's a giant blow up. That's when you would think theoretically, Kenton or TCP or one of the other guys start to call this app out. Then if no one's doing anything to apply out of controls, then the idea is that these nodes can say, look, we're just going to pause this app, this specific app. And pausing app means it just doesn't function. If you post any message into it, it's just like error, error, error. So it's neither can be deposit withdrawal. And then what would likely happen is this contentious app would then be kicked into like withdrawal mode or wind down mode. It may require code update, in which case we could safely unwind the app by submitting new code through the base layer process. So this is where we say, look, okay, we're going to let a variety of apps with adequate due diligence hit the chain with good enough controlling, but some of these apps might become contentious, in which case the Thor nodes can essentially pause and then we can slowly unwind this. Kenton, how do you feel about this? And by the way, this applies not just contentious apps, but also exploited apps or vulnerability reported apps, etc. So Kenton, what's your vibes on that?
Yeah, that's great. I think that's what THORChain nodes would want to hear and be able to do. Maybe just having that ability should help prevent things from getting to that point in the first place. So hopefully it never comes down to it. But just having that ability might help prevent it, so it doesn't become an issue.
Yeah, 100%. And like at the end of the day, we don't want to humbug nodes to approve every single little app, because what if we launch like 30 apps but only 10 really work? So we want to get these apps out, encourage a vibrant ecosystem without too much hand holding. Launch them,
That's actually what was going through my head. I'm like, oh my god, do I have to now like review all of these different apps and keep tabs on all of them? Like that's a huge cognitive burden to a node operator. So yeah, that's something to be wary of.
Yeah, 100%. We kind of want the culture to be, let the devs cook, but let the nodes have like final control of security. So let the base devs cook, let the app devs cook, and if something's becoming a problem, then Thor nodes can step in. And so day to day, it's not going to be an issue. But like if you start to see something on the month to month, then yeah, you can act.
Is this something that this could be included with THORSec or Hibernative, where they, this falls under their purview too, where they start keeping an eye on these sorts of things?
100%. So Hibernative have a transaction monitoring system. So they will be monitoring transactions around the apps, and if they see an exploit transaction happen, suppose they can detect it ahead of time, then you would think that they would halt before the exploit gets really worse. Now, the chances of an exploit on an app are non-zero. It's hopefully close to zero by having due diligence, audits, and a review process, but they're always non-zero. We know that the limit of an app is just one user stealing another user's funds. That's the limit of what can go wrong. But bugs will happen. And so this comes on to our emergency procedures. Well, what happens if we start to see an exploit happen or a vulnerability? Now, in past, like Ethereum and other chains, like exploits, you just let them go. Like there's no way to change them. But we kind of want a better user experience when it comes to THORChain. We want it to feel like a safe place, and the devs have your back. The devs can look after you. So if a vulnerability is reported, we can handle it. We can upgrade the codes for a due diligence process. If there's an active exploit happening, it just takes one node to call make halt, which pauses for 1 hour the entire chain, which then will allow us to more specifically target what went wrong. And so I think that's going to be enough tooling for us to deal with the unfortunate case, low probability case of an exploit on an app.
And just like nodes can halt individual chains and whatnot, well, they'll be able to halt individual apps. So if they don't want to, if halting the whole chain isn't necessary, we can halt an individual app.
Yeah, so correct. So I would suggest a single node who sees a problem, just go make halt, boom, the whole thing shut. Like make halt shut everything down. It pauses message send, it pauses all the message types, it pauses signing, it pauses all the trades. It literally it pauses the chain. The chain keeps producing blocks. It's still functioning, but it pauses all the transactions. And then it's make halt, boom, the red button's hit. Then specifically work out how can we be more, find, specific and halt a specific contract. That's how it's kind of intended to be built.
Cool.
Okay, cool. All right. And last thing into so we talked about deployment process. It's a Regira. So Regira is the debut of a set of branded, excellent UX, well-funded, audited apps onto THORChain. And they are going to be launching, and Hans and the team have built all of this, the WASM, the token factory, the secured assets, blah, 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 blah. So Regia have the strongest momentum off the gate, and they are charged to manage the tooling, the dev support, audit funding, documentation, etc. And they are charged at least to get this thing launched and live and bring the users over. However, Rugi is not exclusive to THORChain, and if an app dev really doesn't want to go through all the support of the Rugi Alliance, they can independently campaign to get their own apps live, because it's not an exclusive system. But Rugi is the best alliance of apps. You will get funded, you will get dev granted, you will have all the tooling and documentation. And for at least the next month or two, there's no other way to get apps live unless you go through the Hans and the core dev process. And so that's in summary. And by the way, Rugi has had zero THORChain treasury support. I just want to highlight that out there. They are funded independently. They are launched independently, and we just want an amazing user experience, well coordinated, well funded, well branded user experience. So if you've got an app idea, you might as well just hit up Pierre and the team and get handheld all the way through. And Hans, anything you want to speak on that? Sorry. I have to bounce, but thanks Hans and the team. Thanks Kenton. Thanks Pierre. Thanks for joining us today. I got to jump onto my next meeting. And so 3.5 out, a couple more apps. ADDR 20 will go live unless there's a bit more feedback to go through. And then let's get going. Cool guys. Thanks everyone for joining. We'll speak to you soon. See ya.